Let's get to some macro analysis now of what's happening globally, primarily fixed income. Joining us now is Priya Misra, fixed income portfolio manager at JPMorgan Asset Management. You think at this point, and good to see you, Priya, you think at this point we can declare victory kind of on inflation and start worrying about growth and whether we're staying at the tightening party too long?
Sure. So I think, well, number one, thanks for having me on. I think the market's focus has shifted, including the Fed's focus, has shifted from just inflation. I mean, you talk about can we declare victory? No, because the data is notoriously volatile. The Fed, I think, has a little bit of PTSD from what happened in the fourth quarter last year and then the first quarter this year. The fact that inflation came in higher. But we've had now 2 months in a row of sequential declining in inflation. Importantly, inflation expectations are well anchored. Wages are actually heading lower. And I would say much of the increase in inflation or the high inflation prints is all coming from shelter. Now, shelter is important, but some of the high-frequency measures are coming down. So I think we can be a little bit more comfortable around inflation. Now you look at the growth side, and that's where there has been a change, and I think the market's waking up to it. This idea that there is declining growth. Now, are we declining to a little below trend, or are we declining much more? I think that only time will tell. But there is clear slowing, and I think that's why the Fed is saying, well, we need a little bit more confidence to cut. But we're either cutting, 200 basis points, 250 basis points if we stay in a soft landing, or we're cutting a lot more. So I think that distribution of outcomes, just, the last time I was here 3 months ago, we were talking about whether do they hike, do they stay on hold, do they cut? I think now we're talking about at some point this year, they're likely to cut. The question is, can they cut fast enough? If inflation remains sticky, do they not cut? Monetary policy works with a lag. Do they not cut fast enough that they can actually prevent growth from continuing to slow down? Recessions are always nonlinear. So it is a concern, I think, for the market, which is why that retail sales number is going to be so important.
Yeah, we'll be watching that. You mentioned that. Now, you think that there is some risk that it's more than a soft landing then?
I do worry a little bit. I mean, typically all the slowdowns we've seen, you go back to recessions historically, things slow down and then sometimes they tend to slow down much faster. It's a very non-linear, say, decline in growth or rise in the unemployment rate. We have had 0.6% of an increase in the unemployment rate. Now, if it continues, I think I'll get a lot more nervous. Right now, we think we're solidly in a soft landing. But soft landings, in my mind, are always about pricing in those risk scenarios. The risk a few months ago was that inflation would stay high. I think that's coming down. The risk now is, can the Fed be quick enough? Do they cut fast enough? We've had only one soft landing in history, 95. So as much as our base case remains soft landing, we still think risk assets make sense. I think you're supposed to do a lot of credit work. You have to make sure you're buying balance sheets that you like or business models that make sense, because dispersion in every sector is increasing. We're seeing it in the equity market. You're seeing it in fixed income. That's a sign that monetary policy is tight, growth is slowing. The future is hard, but I would say at this point we're in a soft landing, but the risks to a slowdown are starting to increase, and we're watching the Fed. Can they be quick enough to start to cut rates, start to reduce some of that restrictiveness?
In some of the cracks that you see emerging, lower income households. So poor lower income households, they get hit with inflation, and then when the things start working in terms of taming inflation, they get hit by slower growth. So they get it coming and going. And small businesses. Exactly.
I think they're linked, and typically hiring tends to be small business driven. So some of those small business hiring intentions have been declining pretty fast. So what's holding all this up, what's holding even the lower income consumers is the job market. So as much as we're going to watch retail sales and parse all parts of it, look at control group, I do think it's the jobs market, and we're getting mixed signals there, right? The unemployment rate is moving up, but the establishment survey, which I think overstates a little bit of the strength, is still showing very strong job growth. If the job market can hold in here, we get 150,000 or so payrolls, I think the soft landing persists, but the risks are that things slow down faster, and I think that's what the market, the Fed, everyone's sort of hyper-focused on.
We don't have time, but we need to watch the French elections, too. It could impact what happens, in your view.
Absolutely. Yeah. We should. I think what we're also seeing is an unwind of the carry trade. In a soft landing, you buy carry, meaning, you think volatility is low. Volatility picked up with the EM elections. Now they've picked up with the upcoming French elections. We have the U.S. election coming up. So I think making sure that you have liquid assets, safe assets, so you don't have to sort of, throw out the trades. You are not forced to unwind.
Okay.
I think that's the spillover from the French election.
This year?